So the spring statement dropped, and instead of fireworks or bold plans, all we got was a polite shrug. More of a wait and see than here's how we fix this. Council tax is rising, growth is crawling, and politicians seem more interested in blaming each other than offering real solutions. What a surprise. But behind the headlines is a much bigger story, and it explains why so many of us feel like we're working harder, earning more, and yet somehow we're still falling behind. So let's dive into what the spring budget didn't say out loud but absolutely should have, and talk about some possible solutions. So, in the statement, it was announced that real GDP growth is now forecast at 1% for 2025, down sharply from the 2% predicted by the Office for Budget Responsibility at last fall's government budget. Let's start with the obvious question: why is 1% growth now considered optimistic? Because that's hardly a recovery, it's barely breathing. The economic equivalent of your car rolling forward in neutral because the road's slightly downhill rather than the ignition being on. A big part of the problem is productivity. In simple terms, it's how much we get out for what we put in. And right now, the UK's productivity is lagging badly. The Office for National Statistics says that public sector productivity is still 6.8% lower than pre-pandemic. This means that we're spending more money on things like healthcare and education, but we're getting less out. In 2023, output in the NHS and schools actually fell, despite bigger budgets. That's a huge red flag. More money going in, but fewer outcomes coming out. Imagine running a business like that. To put that into perspective, we can see a chart of the UK public sector productivity since 2019. You can see since the pandemic, there was a massive decline in the output until the end of 2022, which started to rise, but it's now back on the decline. And it's not just about the public sector. Businesses aren't investing in growth either. In the fourth quarter of 2024, UK business investments decreased by 1.9%, marking the first decline since Q3 23. We've had years of uncertainty, Brexit, political chaos, and pandemic aftershocks, which have made many players safe. I mean, why bet big on the future when the present feels like quicksand? And then we've got growth traps that stop businesses wanting to grow. Take the VAT threshold. If your business earns over 90k, suddenly you're charging 20% VAT and dealing with piles of admin. It's like getting a promotion that comes with a 50-page tax manual. So what do people do? They stall their growth deliberately. One online business owner said, and I quote, "Do anything you can to avoid going over. VAT will likely make your business non-profitable in the current economic climate." Let's say you're a sole trader turning over £90,000. If you tip over into £91,000, you could lose £8,000 of profit once VAT and admin costs are factored in. This is especially true in small businesses. I remember when my dad, who built up his plumbing business for decades, started losing jobs to competition. Not because he wasn't good, actually he was better than them, but because newer competition could easily quote 20% less. It felt fundamentally unfair that being experienced came with a disadvantage, and you quite easily become VAT registered with your turnover climbing by buying expensive equipment like boilers, radiators, and all the other supplies you need. Some may argue that people starting out should have that advantage, but there is a fine line between people who are just starting out and people who are just over the border of the threshold. It's not like these people are super rich. In most cases, they're just doing what they can to make an average wage. And a lot of consumer-facing businesses take the rational and perfectly legal step of holding back their growth to keep turnover under £90,000. Shops will close in certain months and on certain days, trades turn away work, electricians don't take on apprentices, or let's face it, some will push for cash, and even accountants will work separately rather than combining into one business. The VAT registration threshold is a cliff edge that causes financial issues for small businesses. The difference between £90,000 and £90,001 can be £14,000 in VAT. Now sometimes if you're working business to business, that isn't much of a problem. You can simply charge the VAT and then you claim it back. I did that easy enough with my web design business. But when you're working business to customer or smaller businesses, your choice is either increase your prices to add on the 20% VAT, which makes you instantly more expensive, or you have to absorb the cost. This means that without being VAT registered, you need to earn £90,000. Then if you go over the VAT threshold by £1, you need to earn £108,000 to get to 90,001, which is just bonkers. Can you really blame businesses for not wanting to grow, or customers in the current climate not wanting to pay the extra 20% compared to a similar quota product? Well, not really. So what could we do about that? The simple answer would be to raise the limit, but it might not be the case. Compared to other OECD countries, we've actually got the highest VAT threshold. Let's ignore the US here because they aren't really comparable as it varies by state. But what's noticeable here is that countries with the higher growth GDP tend to have lower VAT thresholds. That means that everyone starts paying equal rates of tax sooner, except for the very new startups, which makes for a more balanced landscape. Interestingly though, the higher growth economies also tend to have lower rates in VAT, some nearer 10%. Lowering the VAT threshold would make more people pay it, but with it being lower at say 10%, it wouldn't feel like so much of a blow. It's also worth noting here that there's also a lot of countries with a similar VAT rate to us who have also just lowered the threshold and not the rate, which could be another idea. Raising the threshold would seem good, but realistically, it would just stunt growth further down the line, although it would encourage businesses just under it to grow at least. Another option would be to consider something like a sliding scale, so it gradually got more expensive rather than a sharp drop-off that currently exists. Beyond businesses, even on a personal level, our tax system throws up weird roadblocks. Hit 50k and you start losing your child benefit. Hit 100k and you fall into a 60% tax trap because your personal allowance disappears. You're literally punished for earning more. And it's not just higher earners that face this issue. At lower incomes, the benefit system can discourage work. Under universal credit, for every extra £1 you earn over a threshold, your benefits are cut by 55p. Working for more than 16 hours per week could mean losing your eligibility for certain benefits entirely. The reality is that people will just deliberately limit their working hours or turn down opportunities because earning slightly more just isn't worth the financial hit. That's not laziness, that's the system penalizing people for trying to get ahead. If you create an environment that punishes people for working, then what can we expect? The more you earn, the higher percent of tax you pay as your salary increases. People literally turn down extra shifts and contracts because it's not worth a hit. And we're not even mentioning the 60% trap that everyone tries to desperately avoid. And when your tax code makes people second guess success, that's not a system built for growth. That's a system stuck in reverse. Instead, we should be looking at fairer solutions that don't make both sides of the debate feel penalized because there's a much bigger issue growing, which is a growing wealth divide. So let's talk about inequality and not just the usual, the top 1% versus everyone else. There's a quieter divide growing between the working class and the middle class, and it's being driven by one thing: assets, which is housing and pensions. Because here's the truth, your income tells one story, but your assets tell the real one. If your family owns a home or has built a pension, your wealth has probably gone up. If not, you're likely stuck. About half of middle-income working adults now rents, not own, rents. That makes them financially closer to low-income households than the top. If we look at home ownership, just 36% of people born in the 1980s owned a home by age 30. Compare that to over 60% of boomers. Entire generations have slipped down the ladder. Gen Z has actually performed better than millennials, with 32.7% owning homes compared to 27% of millennials. But even so, that's a far step behind the 60% of boomers in the same age range. We're sat in a generation where house prices have taken such a large surge in price compared to earnings. It's created a big gap in affordability, which has a knock-on effect to pensions. Pension schemes have gotten worse too. Younger people are getting worse pension schemes while our predecessors are sitting on cushy final salary pensions. Everything's more expensive for everyone across the board, and people feel like they can't escape the trap of living month to month, while others are able to queue for 2 hours to buy £20 slices of a cake in the latest viral bakery. So when we talk about inequality, it's not just about billionaires, it's about the growing gap between families with financial cushions and those living month to month. But check out this stat. The wealthiest 10% now hold half of all wealth in Britain across property and private pensions. Think you're doing alright and you might be in this number? Well, to be among the wealthiest 10% of households in Great Britain, your total household wealth needs to be approximately 1.2 million or more. This figure encompasses all forms of wealth, including property, savings, investments, and pension assets. So that leads to the obvious question then, can we just tax the rich more? This seems to be the most obvious answer that people jump at, which I completely get. But I can't help but wonder how many people in a similar situation as them feel the same. I'm all for fair taxes. My partner's a teacher, brother's a police officer, and his partner a nurse. We should pay more for services that we need, but the real question that no one really talks about is, how much is fair? I see a lot of this mantra currently being led by Gary's economics, who I admire a lot for some of his points. But recently, he tends to just say this a lot without offering any real practical solutions. I'm not sure it's quite so simple. It sounds great, feels fair to some people, but here's the thing. The richest already shoulder a huge chunk of tax. If we take income tax alone, the top 1% of earners pay around 30% of all income tax. The top 10% pay around 60%. If we push too far, you get what economists call capital flight. In plain English, the rich pack their bags or their assets, or both. And that's not a theory, it's happening. Over 10,000 millionaires reportedly left the UK. That's about 1 millionaire every 45 minutes. And they make up 520,000 ordinary people worth of tax contributions. Even if a fraction of the top 1% bail, it's a problem because they fund a third of income tax. Their exit doesn't just hurt the tax take, it shrinks the entire pie. We shouldn't let people just go, although let's face it, it's pretty easy for them to do so, especially when their income is generated globally. And it's not just about individuals, it's also about big companies. Some large brands, not naming names, simply set up in Ireland and then they charge their counterpart billions a year for using their IP just to move the tax from one country to another. There's so many ways around it. They might get penalised on personal wealth, but stopping their business being located somewhere else together is another conversation. They've allowed huge companies to do it and pay really low rates of tax, which have closed our high streets. It would really take some undoing and some very harsh consequences, which no doubt would fall on us. Now, should loopholes be closed? Absolutely. Should there be fairer corporate taxes? Yes. But what we really need is a broader tax base, more good jobs, more successful businesses, and fewer growth traps holding people back. I always have this conversation with people, and at the moment, people assume the tax levels go 0%, 20%, 40%, and 45%. But the truth is, there's another tax bracket after that, which is 0%, when people just get rich enough to just leave, which shouldn't be the case. I would much rather be in favour of a flat rate tax scheme, or at least toned down. If you look at some of these countries everyone's flocking to, like Dubai, which I'm not saying is perfect example by any means as they have their own problems, but it's 9% on companies and 0% income tax, but their GDP is 4 times ours. Wouldn't we much rather have lower rates, make it more attractive for businesses to start here and talent to stay, rather than just have them all leave when they get successful enough? 9% of 10 billion extra business would surely be a lot nicer than 20% or 40% of nothing. I think we need to get out of the mindset of the rich people need to pay more and more into the mindset of growth. Lower the tax rate and say, grow your business here, make it successful, and as it grows, you'll pay more and more tax anyway, because that's how percentages work. And then you would think, well, you know what, I will focus on earning more money because it's worth it. And you could do the same with personal limits too. So someone earning £25,000 would pay £2,400, someone earning 50k, £7,500, and someone earning 100k would pay £17,000. So they would still pay more tax and their effective tax rate would increase, but they would likely feel like they were still paying the same tax rate all along, paying their fair share and not feeling like they were getting penalised for being successful. I don't know about you, but that's what would motivate me to build a business, employ people and grow for sure. I'm sure it would do the same for a lot of other people too. We'd get a smaller percentage, but of a much bigger pie. And that's what could be used to employ more people, improve everyone's life in general. And then we can pay everyone higher wages off the back of it. The NHS is a prime example. We invest heavily into training and a lot just up and leave because of the state of the system and the fact they don't get paid enough, which has to change. At the moment, if you want to grow your business, great, but be prepared for a blizzard of admin, VAT, PAYE, pensions, health and safety, reporting, employer obligations. It's endless. Now, big firms have teams to deal with all of this, but a small business, you're probably juggling it between dinners and bedtimes. If you want to hire, good luck, there's a huge skills gap. Brexit made it worse, immigration for other regions fully closed at either, and now the national minimum wage has gone up as well as employer NI contribution. If you want to sell something, well, most of your customers are skint. Inflation hit over 10% recently and wages didn't keep up. Every pound in your pocket now buys less. That means fewer nights out, fewer gadgets, fewer little luxuries. Demand is flatlining, businesses are feeling it, and growth stalls again. And that's a real story. Businesses aren't failing because they're bad, they're failing because they're trapped in a system that's made it incredibly hard to win. And the truth is, even for someone who's described as being well well off, are you really? Here's something I was thinking about the other day, right? So let's say you have a business and you're fortunate to earn £110,000 per year. It would be amazing to have. Let's say you're earning £110,270. So to avoid the 40% tax trap, you would likely put £60,000 into your pension, which is amazing. That leaves you with £38,515 in your pocket every year after tax. Now don't get me wrong, that's great and you're getting pension rich, but are you really getting the money in your pockets in the short term? Essentially, you're getting pension rich and not rich rich. Not that 100k is really considered rich anymore, but it does make you think, how much would you actually have to earn or pay tax on to have, say, 1 million in the bank? You would either have to take an incredible hit on tax, or you would have had to have property that increased in price, or inherit a load of money to give you a head start, or play the long game like most of us and become a slow eventual millionaire. There has to be a balance system in place that allows people to keep more money in their pockets, working to just fill your pension, or aspiring to pay 45% plus in tax. Beyond that doesn't really sound that motivating. Where's the dream to become rich? Don't get me wrong, a lot of us won't do it, but it's a lovely goal to have or aspire to do so. And I'm sure a lot of us, if we had loads of extra money in a bank, would do more things in the community, spend more with local businesses, and everybody could thrive. Instead, most of the people that are successful are just moving over to other countries to do it there. And I hate to say it, but I do think a lot of us would do the same if we were faced with the tax bill, if we're honest. Even if you were earning, say, £300,000, if you would stay here and pay almost 50%, then good on you. But if I was a betting man and you were paying £150,000 in tax, I would bet that you would feel like you shouldn't be paying more. And it's not just here we have the problem. There's a huge amount of people moving from California in the States to places like Puerto Rico, or even places like Texas where they pay way less tax. But that's out. Let's talk about what also barely got a mention. There was council tax balancing, still based on 1991 prices. A £1 million home pays 3 times the tax of a 100k one, even though it's worth 10 times more. This would be really interesting as it could lower the prices of more expensive houses, as there would be less demand if people were really bothered about paying it. A higher tax on homes worth in excess of 1 million or 10 million pounds could really be a fair tax that they could implement. There should also be, which I can't believe doesn't exist, an increased tax on empty homes and buildings. Foreign buyers having second homes seems bonkers to me. The amount of empty properties you see when you walk around London, yet first-time buyers don't stand a chance in buying it, just seems illogical. We need a better infrastructure, roads, rails, housing all underbuilt, delayed or cancelled. Businesses can't grow if we can't move goods or people efficiently. Then there was the migration pressures. Net migration is near record highs. Paying for hotels full of immigrants just seems crazy. I don't want to dive too much into that, but they need to talk about it. They always talk about building more homes, but they never talk about building more schools, hospitals, and let's not even mention the word dentist. I mean, where are people going to go? And also public sector productivity. Throwing more money at a system that delivers less. That's not sustainable. I think there's a big honest discussion to have about the privatisation of the NHS, and if it's a case of where and when it fails rather than if it fails, which is a real shame. All of this left largely untouched, and in reality the spring budget didn't do much, but it said a lot by what it didn't say. Our economy isn't growing because the structure is broken. Tax traps, low productivity, underinvestment, a system that punishes growth. Wealth inequality is rising, not just billionaire versus average worker, but also between generations and classes, which really hurts me to see. And while tax the rich makes a great slogan, the solution needs to go deeper. We need a tax system that rewards work, infrastructure that supports growth, and leadership is actually willing to tackle the boring but important stuff that isn't scared to take real risks, instead of just tinkering with taxes on ordinary folk, blaming one party and kicking the problem further down the line. I mean, boasting you won't raise taxes on working people like a broken record, while increasing council tax and NI contributions for businesses like it doesn't affect working people is just wrong. They blatantly said they would not raise council tax, yet they raised it. I mean, where's the accountability? These politicians should have to stick to their words or face fines or penalties if they lie to us. If you're working harder but falling behind, it's not in your head, it's baked into the system. So what now? We keep having this conversation, we ask better questions, and we demand smarter policies. And we don't just test less over shrugging budgets that dodge the real issues. We need better solutions that lifts everyone up, not just pointing fingers at one another with this. If this breakdown helped you make sense of what's going on, give it a like, drop your thoughts on the comments, as I think it's really important we have these honest conversations. Stay informed, keep asking those difficult questions. Hopefully this didn't seem too much of a rant. There's a lot going on at the moment, a lot to unpack. If you ever want to talk about it, do drop it down in the comments because I read every one. Thanks for watching, and I'll catch you next time.